After a disaster, a sudden house fire, or a major collision, the typical sequence for an insurance claim is highly predictable. You file the paperwork, you wait, and eventually a settlement check arrives in the mail. You see the final dollar amount printed on the paper, but there is no roadmap showing how the insurance company calculated that exact number. Most policyholders simply sign the release and deposit the funds. We assume the insurer conducted a thorough, unbiased investigation, and that the offer reflects a genuine, accurate evaluation of the actual loss. But without seeing the math, accepting that settlement relies entirely on blind trust. If the estimate falls short of the true cost of repair, the policyholder absorbs the economic blow, with no proof of whether the process was actually fair. This dual-axis line chart reveals a stark contradiction in Washington state right now. The flat line represents the total volume of insurance claims, which has remained steady. But watch this second line. Formal consumer complaints and legal notices to sue are shooting sharply upwards. Economists call the root cause of this friction information asymmetry. Look at the imbalance here. The insurer holds a massive, opaque black box filled with software benchmarks, estimates, and adjuster notes. The policyholder gets a single dot of information, the final check. Historically, if a consumer suspected their claim was handled incorrectly, the only way to force open that black box and read the underlying documents was to hire an attorney and launch a lawsuit. Because most people cannot afford the upfront cost and time of legal action, the system weaponizes that friction. The expense of a lawsuit effectively acts as a shield, keeping the internal calculations hidden in the insurer's files. The Washington office of the insurance commissioner is stepping in to bypass the courts entirely. They proposed a new rule to democratize access to this evidence. Under this rule, first-party claimants, meaning policyholders seeking payment under their own policies, gain the codified legal right to demand their complete claim file directly from their insurer. This process operates on a strict timeline. The insurer has exactly 15 business days to produce the documents. Look at what comes out of those files: the adjuster's written notes, independent engineer reports, internal estimates, blueprints, and all relevant communications. This forced, rapid data transfer eliminates the blind trust. It places the verifiable underlying evidence directly into the hands of the consumer. You might be wondering, what stops the insurance company from simply claiming those documents are confidential and refusing to hand them over? The rule requires a privilege log. Blanket refusals are banned. If an insurer withholds any part of the file, they must itemize exactly what is being kept back and cite the specific legal justification for every single redaction. The new guidelines also address administrative delay tactics, specifically the vague, "our investigation is ongoing" form letters insurers often use to stall a payout. If the process takes longer than 30 days, the insurer must provide a substantive written update. They have to detail exactly what information is still outstanding and prove that any newly assigned adjuster is fully caught up on the file. By combining the data transfer with these strict update requirements, the proposed rule systematically strips away the administrative exhaustion tactics insurers previously used to pressure policyholders into accepting low offers. The days of database-only valuations are ending. The rule explicitly prohibits insurers from relying solely on software benchmarks, mandating that payouts reflect an individual assessment of the actual physical damage. For policyholders, the immediate action step is straightforward. If a settlement offer feels incorrect, submit a formal written request for your claim file. Note the date, because that starts the 15-business-day countdown. Once the documents arrive, audit the return. Cross-reference the adjuster's internal notes and any engineer reports against the final settlement offer. If anything appears missing, demand the privilege log. With the black box permanently open, consumers now possess the exact forensic blueprint required to challenge an unfair valuation without needing to spend thousands on legal fees first. Gaining access to the raw data is a massive structural win, but interpreting specialized engineer reports and complex estimation logic remains difficult for the average person. This is where an independent agent becomes crucial. An independent agency, like Mid-Columbia Insurance, operates as an advocate. They do not work for the insurance company. They work strictly for the policyholder's interests. Independent agents know exactly how to read a complete claim file. They use these newly accessible documents to spot the early warning signs of a mishandled investigation, long before the situation reaches a breaking point. And if an insurer still refuses to play by the rules, the ultimate safety net is the state's Consumer Protection Hotline, which serves as the direct enforcement mechanism. True consumer protection requires two components working in tandem: total data transparency to reveal the math, and a dedicated advocate to ensure the system honors the promises written in the policy.